Thanks a lot for joining us here today, Spencer. We're lucky to have Spencer. He's with Blockchain Capital, one of the original crypto VCs, and also one of the original analysts on Wall Street to pick up crypto, to pick up Bitcoin.
Sure. Yeah.
So why don't we start there? What led you when you were at Needham to decide to start focusing on Bitcoin?
Yeah, absolutely. So before joining Blockchain Capital, I was with Needham & Company, as Lou referred to, which is a kind of mid-sized private investment bank on the equity research side, covering software and internet companies like LinkedIn and Salesforce. What I thought were the most interesting, exciting, and disruptive companies in the world, except that on the side, I was paying attention to all this blockchain and crypto stuff, and that was by far much more exciting and disruptive. And eventually, in early 2015, it kind of got to a point where you kind of combine the two, the passion hobby and the professional workplace. And so I started publishing research on blockchain industry as a whole, and then specifically started to drill in on Bitcoin as an asset, price targets, models. What does that kind of stuff look like?
And in 2015, where were the institutional investors? Were any of them focused? Did anybody care?
A few cared. Most people thought I had lost the plot, definitely. But there was actually, I have to give credit to, there's probably like a dozen investors, which isn't that many out of probably hundreds of clients, but a dozen that went really deep, and really I think a lot of them are still involved in the space. Some of them have become entrepreneurs, some of them are investors. So there was some appetite for it, but there was almost very little supply. There was nobody else really publishing, so I think I was seeing all of the demand in those dozen people.
Did you ever have a chance to talk to Jamie Dimon?
I have not, no, but my partner Bart's been speaking on a few conferences here at JP Morgan when he was simultaneously bashing Bitcoin live on TV, and then he's also hosting out of his San Francisco office a Bitcoin workshop.
That's really funny.
Yeah.
So then how did you make the transition from Wall Street to being a VC?
Yeah, so I'd been working with a team at Blockchain Capital just off and on a little bit, and I think everyone kind of hits this point when you're doing it part-time in your day job to you need to go full crypto. This industry just moves so fast that if you're not spending all of your time on it, then it's very, very hard to keep up. And so I hit that point towards the end of 2016 and then reached out to the team at Blockchain Capital as a natural home. It's where all the action is right now, is kind of on the private side, as opposed to at an investment bank where you need acquisitions, mergers, or IPOs, really for there to be any business.
So now you're a VC, you're investing. What is it that you guys are excited about at blockchain?
Yeah, so overall we invest across the ecosystem. We're on our fourth fund right now. So we just closed our fourth fund. It was a $150 million fund. We invest in both equity and token opportunities, kind of across the life cycle. We've been early stage biased. That's been partially just because the size of the funds have been relatively smaller earlier, so you can have more bang for your buck at A rounds and seed rounds. And it's also just where the industry was. There wasn't really any credible B or C rounds just a couple years ago, but there are today. So we invest across the space and try and pick a couple winners in every major kind of application of the technology.
Just go back a moment. You mentioned you just closed a new round, new $115 million round. Mm-hmm. Obviously, you had raised money yourselves.
Yeah.
I think this was probably before you were there,
yeah.
Through a tokenized offering.
Yeah.
This time, obviously, you didn't do a tokenized offering. Do you
Right.
know kind of what the thought process was there?
Yeah, absolutely. So actually, coincidentally, so I was there for the BCAP process. We actually did it exactly a year ago today was when we did our BCAP offering. So we actually tokenized our third fund. So we basically said, okay, we're dealing in this world with all these liquid assets. Can we create a venture fund that itself is liquid instead of having the typical profile of a venture firm that has an 8 to 10 year lockup? So we did that with our BCAP fund. The challenge is, of course, that it is a security. So we did the first offering that was a security. We used exemptions by the SEC, Reg S and Reg D, in order to do the offering. But what we found overall is that a lot of the investors in the space, while they want exposure to crypto and these assets, they don't necessarily want to hold a token themselves. So a lot of our LPs are more institutional caliber, and they really, the last thing they want to deal with is a specific token asset that they have to hold. So for the fourth fund, we went back to kind of the old model of traditional 8 to 10 year lockup venture fund. And then we might revisit a more liquid model on the next fund or the one after.
Okay, interesting. So now, who we are, we kind of started with Bitcoin as kind of the first generation.
Yeah.
We had Ethereum as really kind of the second generation.
Right.
And now where do you think we are in terms of kind of third? We just had Neo up here talking.
Yeah.
They're obviously doing a lot of interesting things.
Yeah, so it's really interesting. I mean, on the one hand, it feels a lot like Ethereum is in the position that Bitcoin was in a couple years ago when Ethereum came on the scene. And so, at the time, you kind of had a group of diehard Bitcoiners, and then Ethereum kind of stormed onto the scene and said, hey, if you like what's going on over there, we can do all that plus a lot more. And that was a pretty compelling message for a lot of people. And at the same time, the Bitcoin crowd kind of said, well, we have network effects, we have first mover advantage, we have a lot of those things going for us. And now I see Ethereum kind of in Bitcoin's position of it has some network effects around it, it has somewhat of a first mover advantage as far as a smart contract platform, but now you have these 3.0 or 4.0, whatever number we're on right now, platforms.
3.5.
Yeah, exactly, there we go. That come out and say, hey, if you like Ethereum, we can do all that and more. And so I don't know where this is going to end up, but what I'm mostly seeing so far is that with a lot of these chains, we're seeing a trade-off away from decentralization and in towards increased functionality. And I'm not sure somewhere on that spectrum it becomes dangerous, right? Decentralization is kind of the lifeblood of a blockchain, but we don't know how much is too much. And the reality is that decentralization is one of many features that a blockchain could embrace, and it's an expensive feature. So a blockchain like Bitcoin is highly decentralized, I would argue, but it compromises on functionality because of that. Now you're seeing platforms like EOS that are taking an opposite tact and saying, listen, we're going to move much closer to the centralized end of the spectrum, but we're going to be able to do a lot more because of that, right? And the problem with this is that people inherently value that increased functionality, but they don't inherently value decentralization. They only value the decentralization when there's an attack, right? Like nobody inherently cares about it unless that it's a security parameter to prevent attacks from whoever else, malicious actors in the ecosystem. So right now, none of these chains are really being attacked, so decentralization is kind of a really expensive feature to have in your chain, but it could prove to be the most valuable longer term.
And how do you even think about it? I've known, obviously you're speaking as though you're not a kind of a Bitcoin maximalist, but do you even think a centralized blockchain is a thing, that a permission blockchain is actually a thing, or should it have a different name?
So the jury's still out. I would guess that, so one of the things I think that maybe our industry could have done a better job at early on was defining what is a blockchain, and we never really did that. And so instead what we have is a spectrum from an Oracle database all the way to a fully decentralized system like Coinbase and everything in between. I actually am still, to some extent, I wouldn't say a Bitcoin maximalist, but I certainly still see a lot of value in Bitcoin, and I wouldn't just discount that because there's platforms that have new shiny features. I think that it's easy to build centralization on top of highly decentralized platforms. This is something that Andreas Antonopoulos has talked a lot about building soft promises on top of hard promises. But you can't go the other direction, right? So I can't take a centralized system and then build decentralization on top of it. That's kind of like an upside-down pyramid. It's unsustainable. It tips over, right? But you can go the other way. So I think that instead what we'll see, instead of seeing a lot of these different trade-offs on different chains, we might start seeing some of those trade-offs built on top of Bitcoin, where I can use kind of a semi-centralized system that offers efficiency and improved functionality, and then I can use also the main chain if I'd like to as well.
And so if you think about building on top of, let's say, Bitcoin now, obviously there's a lot of struggle with the functionality, so we're seeing things like Lightning Labs that can have dramatic impact on the throughput of the Bitcoin blockchain. Do you think that's the solution? Do you think kind of building something on top of something that is kind of fundamentally broken is going to win, or do you think you're better off kind of starting anew?
There's certainly trade-offs to both, right? I mean, it's clearly, there are some advantages if you can start a new chain and you can learn from some of the lessons that we've seen in Bitcoin, then certainly that's an advantage. But I do certainly ascribe to the layered kind of evolution of this ecosystem. So I do think that we'll see, Lightning being one layer on top of Bitcoin. I do think we'll see several. Historically, we've seen this with other protocols like TCP/IP. Not to say that crypto and blockchain is going to evolve in the same way the internet has, but I think that the layers thesis is a very reasonable one and definitely one I ascribe to.
And how do you think about community? Because it's such an important part, obviously, particularly I think as you get more decentralized, community becomes more and more important. That said, there's also a lot of infighting in the community.
Right. I mean, so community is obviously tremendously important with these, and we've seen a lot of very public kind of fighting, I guess we can call it that, maybe just discussion. And I think that part of this is a change in a mental model. We're very familiar with watching companies grow. And in a company, somebody sits back in a boardroom and they have these fights in a private setting and they duel it out, and there can be screaming and yelling and name calling and all of the things that we've seen within Bitcoin, but it occurs in a private setting. And then publicly, the group comes out united and they say, this is the decision, this is how we're moving forward, and everyone cheers it, right? In Bitcoin, there is no back boardroom to do that discussion. You can't go and tap a developer who maybe, like over time, Bitcoin, I think with its tremendous growth, has seen some tremendous growing pains. Part of that has been outgrowing some of its original use cases, some of its original developers, and some of its original even CEOs of the companies, right? In those situations, there's nobody to kind of come forward and say, hey, thanks for all you've done for contributing to the Bitcoin code base. It's time to move on for you now. You got it from kind of this fledgling ecosystem into a medium stage one, and we need to kind of upskill to get to the next level, right? Instead, what you see is very messy divorces that are very public. And so I think it's a change in mental model that we need to make of expecting that it's not necessarily a bad thing to see that discussion. Instead, we get the transparency into it instead of it happening behind closed doors.
And so how do you feel about forks? And obviously that's
Right.
the kind of the ultimate way to, if you're unhappy with the way things are going in the community, you
Right.
can then go start your own community.
Right, absolutely. I mean, I think within any ecosystem, your main two choices are kind of voice or exit, right? So it's either I use my voice to try to influence change within the ecosystem, or if that doesn't work, I can exit. And I think one of the features of blockchains and crypto in general is that the exit costs are very low. So it's very easy for me to morph to either just take an existing code base like Bitcoin and fork it to make a change that I really desire, or to just pop over to another crypto or blockchain that already exists, right? And so having those two options of voice and exit are pretty powerful here.
And do you think, do you think that strengthens the community to be able to have that option, or do you think it weakens the community by, kind of dividing it up and getting kind of a balkanized state?
I think it's kind of the change in mental model again. So I think that it short term looks like it's bad for the ecosystem, and I think long term creates a stronger foundation because you see people that are better able to kind of express their views. We get to see competing views played out in real time in a public marketplace, and then let the winner kind of emerge.
And then let's drill down. You're an investor, so let's drill down. How do you think about, how do you look at valuing utility tokens?
Yeah, so it's a challenging question. I think there's a lot of interesting work being done around what evaluation models for these tokens look like. My sense overall is I like to try to stay away from doing too much of that. I think that when you're creating a model, what you're really trying to do is say, you're trying to model demand and see what is the impact on price. In order to model demand, you need to know how these things are used. And I think it's still very, very early in the game to say how these things are used. Probably with Bitcoin, we have the most information. So it's been in the wild for 9 years now. Has a pretty extensive user base. So we have some idea of how people like to use Bitcoin. It gives us some opportunity to model. But I think around pretty much everything else, it's a worthwhile but a pretty challenging endeavor.
And how do you think about security tokens? Do you think security tokens are going to be a big thing? Do you think, I actually wrote a piece called The Flippening when I actually think that security tokens, we're going to see more issuance of security tokens next year than utility tokens.
That could very well be. I mean, I think that there could be some low-hanging fruit there. So I think that in general, let's think about this as tokenizing existing assets and leveraging this technology on assets that we already know. I think that we might particularly see that in notoriously less liquid assets like real estate or venture capital. But in my mind as an investor, I think that I see the big opportunity in new assets. I think that with any kind of new big technology change, our first impulse is to apply the old business models that we're familiar with and apply them to the new technology. So I see a lot of people that, for example, want to create the decentralized Uber or Facebook on the blockchain or things like that. And honestly, those could be decent opportunities, but I have a feeling that what we're really doing in this industry is defining brand new business models that didn't exist before. And again, not to overuse the internet analogy, but we saw the same thing before, right? Search engines and social networks were not really a business model until the internet came about. And I think that similarly, the biggest opportunities here in crypto are going to be things that we haven't seen before. I think actually, a lot of that will leverage natively digital assets. So that kind of comes back to tokenizing traditional securities. Once we take an asset and we make it natively digital, we shed a lot of the constraints of the physical world, right? So all of a sudden now we're not limited by the same physics that we have. And it enables you to do a lot of new things. So like two early examples within Bitcoin would be multi-signature transactions and time lock transactions. The former just allows me to send Bitcoin to an address and specify that it can't be moved unless, say, 3 of 5 people, 8 of 10, 99 out of 100, whatever parameters I set, unless that parameter agrees to the transaction, the money can't move, right? Now that's something I can build on top of a legacy financial system, but you're hacking it on top. This is something that now is a couple lines of code within Bitcoin, and so it's another kind of example of software eats the world. This is software eating the world of assets and value for the first time.
How do you think so? One of the other things we're seeing, obviously, is companies already existing that are now tokenizing, like Telegram. How do you look at those?
Yeah, absolutely. So so far what we've seen, I think, is companies that have kind of moved into the space a little bit opportunistically. So maybe they needed some more growth capital and they either couldn't or did not want to go to traditional venture sources and have used the ICO market opportunistically. In some cases, I think that could be a pretty attractive model, and in others, I'm not as positive. I mean, we chose not to invest in Telegram. I think that Telegram as a platform is very interesting. I think that if we understand kind of what's going on there, so the backstory here is raised close to $2 billion at a $4 to $5 billion valuation for a network that doesn't really exist yet today, and have promised basically the world. I think that overall what we saw there was a lot of venture capital appetite to invest into crypto because there was $500 billion of liquid value created over the past 12 months, and a lot of venture firms were having honestly really awkward conversations with their LPs who called them up and said, hey, I invested with your fund to go out and find the next big wave of tech companies. I see there's been $500 billion of liquid value created over here. Which investments did you make? It's a really awkward conversation for a venture firm to go back and say zero, right? So at the same time that they're having those conversations, Telegram rolls along, which is a company that a lot of venture firms have wanted to invest in for a long time. Ever since WhatsApp was acquired at a tremendous valuation, people have seen the value in that market. But Telegram has always been a platform that has denied any kind of venture investment. So at the same time, you have venture firms that have wanted to invest in Telegram but can't. They have LPs telling them, why haven't you made any bets in crypto? And all of a sudden, a $2 billion offering rolls along, and you can deploy $40 million right away. Hey, this is a great way to say, I have 2% of my fund deployed into crypto, right? So I think that helps kind of explain a little bit of what's going on in the ecosystem there and how we think about an opportunity like that.
So really interesting stuff. So obviously, I'm sure you must have lots and lots of dialogue with VCs who don't have a lot of experience in crypto. What's been your experience there? Are they, do you think they're starting to get it? Do you think they still don't understand what's going on? In your view, I guess if they're putting 40 million into Telegram, they probably don't have that great an idea of what's going on. Where do you think we are in that cycle of kind of the traditional VCs getting into crypto?
I want to give them a lot of credit. I mean, we do work pretty closely with a lot of the teams now. So a lot of them have now kind of a dedicated 2 or 3 person team that's just focused on crypto. A lot of times it was a very junior person at the firm that was, again, kind of maybe paying attention to Bitcoin on their side. All of a sudden they said, hey, who in the firm knows something about what's going on with Bitcoin or Ethereum? The most junior guy at the table kind of put up his hand. And next thing you know, he's running the blockchain division at a large firm. So again, I do think they're skilling up quite quickly. But I think that it's a space that is incredibly complex and dynamic. I mean, even with us having a full team that is dedicated on this topic 24/7, there is a lot going on in this industry, and I feel sorry for teams that would have to spend only part of their time on it or have part resources on it. It's tough.
How has your life changed, over the last 9 months, right? Because we had this massive run up, and now, we're down pretty significantly. And has that changed what you do on a day-to-day basis? Has that changed your view of the world, or is that just, kind of, what it's always been?
Yeah, zero change to our view of the world. I think that when you see prices go up a couple $1,000%, you have to expect this. I think that every investor pretty much in the industry was saying that we're going to get a downturn like this. Blockchain Capital was founded before the big 2.5-year bear market of Bitcoin from 2014 to 2016. And so, we've seen this before. To be honest, it hasn't even really bothered us at all. If anything, it's taken a lot of the noise out of the ecosystem. The number of deals that we were seeing and the number of things that had opportunities that expired within 48 hours of us receiving them, that was kind of the trend towards the second half of last year. And we kind of decided to take a step back and say valuations are too high. Everyone's just kind of doing these rushed deals and rushed offerings on a constant basis. And now we've seen a lot of that kind of fade away. And so it's a much more calm environment. We're seeing slightly higher quality projects. Overall, it's good. The builders keep building, but the people that came for quick money are gone.
And what do you think about the trend? Do you think now we're moving to kind of what would have been kind of a more traditional VC trajectory for companies in that, instead of just going, coming up with a white paper and ICOing, now we're starting to see more companies, particularly I think the stronger companies going and getting equity rounds before their ICOs?
Yeah, great question. I mean, I think that as the ICO phenomenon kind of emerged, a lot of people took the traditional venture playbook, they crumpled it up, they threw it in the trash, and they said, we don't need any of that. And I think that what the industry is doing now is kind of pulling that playbook back out of the trash and saying, like, okay, well, maybe there's some room for innovation here and some things that we can do better, but there's some pretty important frameworks here that venture capital has formed over the past 20 years, and maybe we should leverage some of those. I mean, just some low-hanging fruit here would be, aligning interest between investors and operators, right? So that is basically the entire purpose of venture capital, is to make sure your interests are aligned, at least the purpose of all your legal documents kind of binding the two of you together. And there has been kind of a mismatch within crypto. So you had a lot of founders of projects that received all of their tokens and received all their value on day one after doing their ICO. They had no vesting, they had no lockups. They had no long-term reason really to even build the platform to begin with. They already had the money. Disappeared to an island, it's a hard problem. These are hard things to do. And so I think that what we'll see is a realignment kind of interest and pulling that venture capital playbook back out of the trash.
Okay, last question.
Yeah.
Now, at a high level now, how are you thinking about the opportunities in crypto and the risks?
Yeah, absolutely. So, I mean, overall, I think that we're seeing quite a bit of opportunity out there right now, just in general, given kind of a downturn, a little bit of a change in sentiment. But there's also a ramping up of kind of venture capital activity that's really trying to be deployed to the space. So, we see some deals that we think are overpriced, and so, we're always kind of balancing that risk-reward kind of opportunity. But I mean, I think that when we look out over the next 5 to 10 years, I mean, we're dedicating all of our time in this industry because we think it's going to be a home run, and that's generally our viewpoint.
Well, terrific, to home runs. Thanks a lot, Spencer.
Thanks so much.